Aloha, I'm Stan Cox, Principal Strategist and Broker with SC Finance Strategies and Insurance Consultants. I'm also author of the books on the tax-free cash growth warehouse strategy. A big part of what we do here at SCFSIC is financial education. And as our agency name indicates, we are insurance consultants as well as finance strategists. So, where do annuities fit in? And that's what we're going to talk about today. First, annuities are a type of insurance, specifically income insurance. Annuities are provided by insurance companies and can provide a guaranteed source of income. Now, I want to address this one issue and get it out of the way right now. There are some financial advisors who are very much against annuities. And they promote the idea that annuities carry high fees and are just no good. But that's not true. Yes, variable annuities have fees, and some are higher than others. And as with any variable product, which means that it is something that's invested in the stock market, the owner of variable products, including variable annuities, can lose money, but that's only with the variable annuities. Other annuities have no fees, except early surrender fees. And other than that, fees are a non-issue. So, the reason why some financial planners like to scare people away from annuities in general is because financial planners and advisors are money managers, and they collect fees and commissions from clients and providers. But once your money is in an annuity, they don't get any more commissions, as they do when you place your money in their hands to manage your investments. So now I got that out of the way, we can move forward. There are single premium annuities where you would put a lump sum of money all at one time, and then there are accumulation annuities where you would make a number of deposits into the annuity over time. Annuities are guaranteed. That is, the growth is guaranteed at a specific interest rate. And there are indexed annuities where the growth is tied to a stock index. Now, this is different from variable annuities, because with variable annuities, the money is actually invested in specific stocks. With indexed annuities, the money is placed in an account that is attached to an entire index, such as the S&P 500 and others. The benefit of indexed or guaranteed indexed annuities is that while they have the potential for much greater gains than most fixed annuities, they carry no risk of loss. So if the associated index loses money, the annuity that's attached to it won't lose any money. But if the index does well, the coordinated annuities will also do very well. So remember, if the index tanks with a guaranteed indexed annuity, even if it loses money, the associated annuity will not lose money. And that's the guaranteed part. So if the index loses, the annuity won't have any gain for that year, but it won't lose money. Annuities may be designed to pay out beginning after the first year or after a designated period of time. They may be scheduled to pay out for a specific number of years or for the entire life of the annuitant. The annuitant is the person designated to receive the payments from the annuity. That's all. There are many excellent cases for the use of annuities and several excellent applications. For example, annuities are often used to provide retirement income. as they can be designed to pay out without running out for the remainder of the life of the annuitant. Annuities may be used in conjunction with a trust. An example would be where a parent or guardian dies, leaving an underage child or children. Their life insurance benefit may be paid into an annuity, which, governed by the trust, may then begin to make payments to the beneficiary in any number of optional ways, depending on how the trust is set up. One way we use annuities for our clients is where a client has money in a qualified retirement account, for example, and they want to roll that money into a tax-free cash growth warehouse account. Now, qualified accounts are taxed on withdrawal, but they can be rolled over into any other kind of qualified account without taxation. Annuities can be set up as qualified accounts, so there would be no tax on the amount rolled into a qualified annuity from a qualified retirement plan. Then, typically, we would set up the annuity as an immediate annuity where it will begin to pay out on the first anniversary and then on each subsequent anniversary for 7 to 10 years. And that way, as the money is taken out of the annuity and placed into the tax-free cash growth warehouse account, only the amount of money that is withdrawn from the annuity becomes taxable. And the tax on that amount can be paid by leveraging the cash value in the tax-free cash growth warehouse account. So that money can continue to gain and earn interest, compounding dividend interest, even as the tax is paid. So why do people take their money out of their qualified retirement accounts and put it into a tax-free cash growth warehouse account? Well, simple, really. When money is in a qualified retirement account, it's usually invested in the stock market. As such, it is subject to losses when the market corrects or suffers a loss, which it does on a regular basis. Secondly, money in qualified retirement accounts cannot be withdrawn without taxation and penalties until the owner is at least 59 and a half years of age. And neither can the money in those accounts be leveraged in most cases. With tax-free cash growth warehouse accounts, there is no risk of loss, so the money is protected. There is always a gain, and the gains are tax-free. Also, the money in a TFCGW account can be leveraged in such a way as to allow the money to continue to collect tax-free dividend interest even as you use the money to finance things or invest. And of course, when you leverage your TFCGW account, you determine how, when, and how much you will pay back. So while generally annuities aren't among the highest earning accounts, they are safe and have many useful and advantageous applications. For more information about annuities, life insurance, or the tax-free cash growth warehouse strategy, contact us by the email and phone number listed below in the description box. And please subscribe to this channel and post your comments and questions here. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.